Welcome back. This is part 3 of our lessons on mapping any market, any time frame. This will be the last lesson. In this lesson, we're going to talk about the minors a little bit and the role they play and make one more definition. Last swing broke. So what I'm doing here is I'm adding one more layer to this so we can really get in tune and read our markets. You don't have to add this layer, but it gets used in several ways, and I'm going to talk about it a little bit. So just following the majors is enough. That we've learned in lesson 1. In lesson 2 we learned to follow it live. But let's add the minor here. So just a quick review. A new high confirms a swing low. Okay, we have a swing definition. A new high confirms a swing low. A new low confirms a swing high. So the first thing we do in a chart is we come in here and we mark our swing lows and swing highs, right? So we see all of these are swings. They meet the definition. You make a new high, it's a low. Confirmed. All of these are swings. So now we're going to make one more distinction in the flow, and we're going to divide this up into major and minor. Major is going to be the largest reaction leg. And so this will be our reaction leg, and this will be our impulse leg. So we go and look. Is this the largest reaction leg? Yes, it's bigger than anything on the board. Okay, that's our major. Minor is going to be the next largest. So these are swings as well. They're just smaller, like that. Okay, so minor is going to be the next largest. So if we look at this and we've mapped our swings, we'll see that this is the next largest. It's bigger than this one, it's bigger than this one. It's the next largest to this. So this is going to become our minor swing. Now, there's a few reasons we want to be able to mark this out. And there's several ways to use it. It's going to show us a turn in the market. But whenever we get this, and on our model it's going to look like this. This will be a swing, but it's a smaller swing. It'll be a smaller reaction leg. And when that breaks, this will become our last swing broken. On my charts, you'll always see me mark this in blue. So this will be our last swing broke. Literally means last swing broke. But for our purposes, we are going to call it the minor that gets busted. Okay? And so one of the main reasons to be able to make this distinction is once it gets busted, we want to follow this leg on the way down. So as soon as it's busted, you start doing the same thing with reaction legs. And you follow, so on and so forth. You can already see how this can, in this particular variation, can land into a trade to sell it down to here or even down for an expansion. But we're not going to get into all that yet, into the functionality. But right now it's going to help us follow the market down with a very first projection. So at this point, you know that swing is busted, and we're perhaps on the way to that blue swing. And so this is a way to follow this. It's a way to follow this, very important. The other big reason we want to be able to make these distinctions between minors and majors, and we do the same things with other pieces of the language too. We do the same things with gaps, tails, outside bars, mountains, valleys. But one of the main reasons you want to be able to make this is so you can measure very precisely. So for instance, I can measure off my minors, boom, or I can measure off my majors. Boom, price to the median line. And it really doesn't matter what you're using. You can be using fibs or blah, 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 blah. You want to take your measurements, whatever you're using, very precisely. So this particular lesson, although I use median lines, This particular lesson is good for whatever you use. However you're going to measure, you want to be precise. You have minors, you have majors. Now we can make that distinction. And again, if adding this much to what you're doing starts to overwhelm you, drop it and just track the majors, layer into it. My golden rule is whenever you're overwhelmed with anything, start subtracting things. For trading, it's best to have our minds as relaxed as possible. And if we got too much going on at the same time, it causes a lot of tense. So this is an extra layer. We're not even talking all the different things we can do with it, but we're talking about how to identify the minor and then make that next projection. Price does not have to stop at this projection. It can keep going. It does not have to stop at this. We're not building a system here. We're building a way to structure markets so that you can read them, you can connect to them, you can get the rhythm. Once you understand that you've been able to map like this, number one, you can do your own research. Number two, you can start learning from price how price moves and the rhythms of swings. Okay, now let's switch over to a chart we can follow live. We'll switch over to one of my currency charts. Going to be looking at a daily pound, and we just start with the simple definition. Start with mapping and structuring your swing. Look for the major. It's going to be the largest reaction leg. So you just copy that length. It's bigger than that one, bigger than that one, bigger, and it's right about there right now at its projection. This is a live chart. Now on this leg down, let's look for the next largest. So remember, a swing is a swing is a swing. We're differentiating by the reaction leg. So this reaction leg is about that big, that one's about that big, that one's about that big, and then we turn. So this will become our last swing broke. And what do? We turn around and we follow that the other way. And again, if this is too much for you, then don't worry about the minors and last swing broke. Just follow the big blue swings. It will let you know when it stops doing that and when it's continuing doing that. It's a projection. By being able to make these distinctions, it's going to teach us a whole lot about price. So for instance, this is a very typical rhythm that you'll see. So if we were to map this in a model, it looks something like this. And you've seen me do a few trades in the blog posts like this. So remember, this would be our major. This would be a minor. They're both swings. And so it's quite normal for price to bust these minors, get everybody excited, right, to bust these minors before carrying on. If it is going to turn, the place to look for a turn is going to be right here. So this is an extra layer to things. We don't know. Price will tell us, but now we have a way to orient ourselves to this. If it's too much, just stick with the blues. So in the first part of this series, we learned how to map majors. In the next part, we learned about following them. In this part, we learned about using this minor as the last swing broke and how it can show us a few things. It's a basic lesson, but in this simplicity, it helps relax the mind, and you'll see how price moves. And then you'll realize that I'm not offering opinions about what I predict should happen. You don't have to lean on that. You don't have to lean on anybody offering opinions on what they predict should happen. What I'm offering is a way for you to see the facts for yourself by structuring a market simply so you can make your own informed decisions. That's independence. Because the predictors have no clue in the first place. Just make you feel a little better. The other major things I want you to get out of this is to see the market in waves, to experience the market moving in swings rather than all of the other noise and everything else that goes on. When I do this, I see swings. When you can make these distinctions, you can also measure very precisely. You know what you're measuring. It's not random. Whether I'm using this median line or this parallel set, whether you're using fibs or something else. I know if I'm measuring for the minor, I know if I'm measuring for the major. And actually, you don't even need the tools if you don't want them. And lastly, the big thing that this is going to teach you is how to flow with the market and how to change with change. When blue gets beat, go the other way. You need to learn to change with change without relying on lucky socks. The market, this is the biggest thing a trader can learn, is how to flow in an ever-changing market and change with change. And this little exercise can help you with it. So I hope you enjoyed the series, and that's a wrap.